What's going on? Good morning, everyone. Good morning. Good morning. What's going? Good morning, Cass. It's Thursday. I mean, we're more than halfway through the week. We still got one more day out. No, besides today, obviously. But it looks like the week is gonna pretty much come down towards finding support. Pretty much more so finding another, I would say, higher high for a better term. But it's not looking too promising right now. This was just a lopsided little gap down that we had. I'll get through some different individual charts here that we can take a look at, in which case I can actually kind of show you some of the different formations that we're setting up that may have been more so leading towards to this downfall. All right. So we'll get into that really quickly. Give me just one quick second, guys. All right, my bad. All right, so kind of gonna get jump into spy here real quick, so we can kind of get going here, kind of show you some different things that are going on. But this definitely does look like a shit show. I agree with you, Cass, 100%. This is an absolute shit show. I was actually talking about yesterday coming into minor support yesterday at that 394 spot. I had 394.13. I believe the market kind of gave us right around that 394 half for the low so far this week, but we were not able to pretty much break that support until they decided to break basically gap us down, and that was one of my more concerning parts. But although I was actually expecting maybe the flip side, if we market really wanted to continue this rally, keep it high and tight, we possibly would have rallied off of Nvidia's earnings, but that was pretty much obviously not the case, right? We basically ended up breaking down, but either way, I was expecting more so a drastic move. Now, I will point to the one area that I was actually more so intrigued about in terms of the downside, but I was more so a little bit more skeptic that we could have had this kind of directional break that we're seeing right now in over a percent of a move already. And it could have ended up happening vice versa to the upside if we may have had good earnings on Nvidia. That was my flip side of the scenario. All right. But getting into the levels, so I can basically tell you that I was actually watching that 394 spot. 394.13 was my minor level support. We got the gap down below it. Where does that put us into my next level? That is basically right where we're hovering right now at the moment, which I actually had 390.36. So a few cents off right now with pre-market action kind of still fluctuating, but that was my next level of major support. Now, here's pretty much the intriguing thing that I want to see going in towards the end of the week here. Right? This is going to be the most intriguing thing. I was actually talking about the fact that I wanted to see us test the 20-day EMA if we got more of a significant pullback. I think I pretty much expressed that since Monday more so, right? But we can overshoot to the downside here, in which case my next level of support that I would be watching here is 387.05, right? But with that 387.05, I'm going to look to see if we can snap back and pretty much hold the body of this weekly candle right now above that 20-day EMA, above 389.86 by the end of the week. Not by the end of today, but more so by the end of the week, which also gives us tomorrow's trading day. All right. If we can hold the body of this weekly candle above that 20-day EMA, I do believe that still sets us up for a pretty much a healthy price action for the week, despite the ending towards the week here. But if we can hold that 20-day EMA, that still sets us up for another leg higher, in which case that would actually play right into the fact that next week we do have Thanksgiving coming up, right? We could possibly see low volume, which is usually relatively what always happens on a short week, and that sets the table for a low volume melt up, in which case we can revisit SPY back above three or back above 400, right? And that'll come back into play where everyone had the 411 targets, the 406 that I actually had, and those specific targets above 400 would all come into play, all right? But I do need to see this weekly candle up close above that 20-day EMA, above 389.86. If we can hold and close above that 389.86 by the end of the week, then, like I said, I believe that sets us up for a low volume melt up going into a holiday week next week. All right. So that's pretty much my bull case scenario for you. Now let's get down to the bear case scenario. Right. Now, if we end up breaking down below 387, I believe that actually sets us up to either consolidate much longer than I anticipated, or vice versa, we end up breaking down like I was pretty much looking at the opposite, right? Because I do have a little bit of It's not much that I think is holding us between this level of that 380s, that 387 there, between 387 down towards 376. I believe it is not much here, in which case we could see a rather strong gap down again going into next week. And then now I'm gonna come into pretty much my bear case scenario where things are gonna get rather escalated, and that's going to be when we break down below 376. If we end up breaking down below 376 between this week and next week, that's when I do believe that that entire case of us trying to get the reversal back up above SPY going over 400, I think that's going to likely go out of the window if we break down below 376. So that more so is the bottom end of saying that, you know what, the bulls can hold on. We can kind of get a bigger consolidation, retest a pivotal support level, and then we can get the bounce back up. But if we end up breaking down below 376, I believe the Bears are going to have a feast, and we're going to start to look back towards our breakdown going in towards the end of the year, and it's not going to relatively be likely a good holiday season. All right. So that's basically my bull and bear case scenario. Now, onto a few different charts that kind of just stood out to me. I'll give you three individually that just had, I want to say more so a picture perfect setup, right? In terms of saying, you know what, you like to trade a pattern, in which case I'm more so very pattern related. Here's three different patterns. One, you had Boeing, right? If I dial down towards the hourly here, you can see Boeing with a picture perfect little textbook flag action. And if I'm not mistaken, I remember that Sig actually called this out yesterday on during live, saying that the chart did not look so bad and it was a nice little flag setting up right here. But of course, you did also have the broader market just pretty much dying, right? That was not the ideal case scenario, in which case, you see the market dropping and you're trying to catch a knife at the bottom of the flag, saying that, yeah, you're absolutely going to break out. That's not definitely the case. And also, given the fact that, have you seen how much Boeing has actually ran since we pretty much had our, I want to say, our last little bottoming type of action from 132 from the end of last month, and we've ripped what, about near $46, $47 from that low of end of last month. That was way too much, way too quickly, right? So my indication was that, all right, if SPY does end up breaking down, this actually has a long ways to the downside. So next key support level I was watching, all right, I'm like, all right, if I end up buying this off of support here, right around that 172 mark, now if we end up breaking down off of this flag, look at how much you have to the downside. Support, next level support was 167.20. Below that is 163.41, and you have a sneaky little small little gap fill here sitting below 160.63. So it was a long elevator to the downside here if that flag were to break to the downside. And that's particularly what we are seeing here this morning. So that was one of the red flags that I was actually looking at. That was just looking at Boeing. The other name that caught my attention as well was going out towards Microsoft. This is another one that caught my attention. You had a beautiful little bull flag sitting up here as well on Microsoft's hourly chart. But then what did you also have to the downside here? That was more so significant. Was a massive gap fill sitting here below 235. And that is a scary gap fill, especially when you see the market gap down as much as it already has this morning. If you were in calls this morning, you would be terrified looking at that. So that was a disgusting one that I actually looked at as well. Just now, so we already saw a flag set up on Boeing. We saw a flag set up on Microsoft going into the close yesterday. Now I gave you the case in which both of them actually broke to the south off of their flag and their pennant. And now what ends up happening? You have so much room to the downside as this market already made about a near 40-point move on SPY since our last bottom in this bear market. All right. So that was a scary factor of those two different names. And then here was pretty much the caveat to looking at Microsoft and Boeing having such picture perfect patterns was also looking at the XLE. You have a beautiful ascending broadening wedge. You already had a nice little top out. You set up a little tilted head and shoulders action. You had the breakdown. You got a little bit of a consolidation towards the end of the day yesterday. But if you ended up breaking down even further, going into this morning, as you see, you gap down. Now where you're at, you're close enough to that gap fill sitting at 90.60. So it already gave me the indication that energy was going to be bearish today. We already basically saw a little bit of a flattening out towards a lot of breakdowns across the board going in towards yesterday's price action. And so that did not set well with me in terms of saying that, you know what, I felt confident that Nvidia was going to have good earnings, that I wanted to swing calls, and that's exactly why. If I actually were to tell you exactly what I swung, I did swing XLE puts, because that was the one sector in which, if there were going to see any weakness, and ideally one of my opposite of my favorite little patterns here, I'm usually typically trading the descending broadening wedge. This is an ascending broadening wedge, which is the bearish case. So I did end up swinging puts on XLE, and just in case the fact that we could have saw tech actually rally, maybe more so if Nvidia had done better than we expected, we would have saw the semis up. That's why I was more so skeptic to say that, you know what, I wanted to swing anything within tech. I'd like to have stayed clear. And obviously now looking back, I would say yeah, hopefully I would have swung puts, but that was not the case, and we will be talking a different story if Nvidia would have held up the semis. All right. By the way, going on, El Lobo, what's going on? Good morning, my guy. Por favor, Netflix. All right, let's see what's going on with Netflix. Let's take a peep at it. Another one with a nice little pennant action going on here. This is another one that's just been a ripper. You had that little bottoming formation that took place. You had a nice little higher low that's set up from basically our bear market low here, right? Dating back towards November 9th. But this is another case scenario in which, kind of similar to how I said, you had a monster rally out of Boeing. You had a monster rally out of Microsoft. Those were both setting up flags or pennants. This is another one in Netflix here. You set up a beautiful little pennant action right here on Netflix. So now that's actually three different names that we've already seen, a flag or a pennant, after a monster rally that we've already had since our current bear market low, right? You ended up hitting from, what is this, 252 all the way up towards 312, 314, you could probably say, over a 50-point move within just a matter of less than a month. That was 10 days in which you made that much of a monster move from 252 up towards 313 that you made. Right? That's an over 50-point move, in which case you're literally ended up chasing at this point if you end up trying to buy calls, and especially more so swinging to that matter. Because if you're day trading, obviously you see the gap up, you're gonna play the momentum, right? But when you're swinging, especially knowing that this is a bear market rally, keyword bear market rally, that's the major concern. Especially when you see so many wedges, so many pennants setting up, and then I just gave you the bearish case on XLE that was already showing a bearish pattern. So a lot of this kind of gave me a little bit of a hindsight in which, all right, obviously you know it's going to be a large directional move. Now, where were you going to be favored, right? It's more so you're leaning the fact that the tech would have gone up a lot higher. Maybe the semis would have rallied on back in Nvidia, but that was just not the case. All right. So you already had the breakdown off of the pennant here, basically that took place. Now you're gonna look for hourly support, which also lines up with your prior consolidation, your prior distribution, and that will set you down towards 293 half is what I'm looking at. 293.35 is that key level that I'm watching, and that is where you should likely overshoot. Likely after the opening bell, you could probably get that little $3 move to the downside and see if we can settle into support at 293 before getting any reversal and possibly even retesting that little breakdown off of that pennant, in which case we could see a nice little recovery and reattempt to break back north over 300 and retest 303. All right, so 303 will be my retest spot. If you can build a base at 293.35, then look for the reversal to take place, and then we can retest as high as 303. But I don't believe that you get as high as 303. I believe that if you even get towards 290, 298, retesting 298, in which case 293 support hits, you'll get about a $5 move to retest 298 as relative short-term resistance, and then you should get continuations to the downside, in which my next pivotal level of support to the downside is 281.40. All right. So I guess your two key levels here are Lobo. Either you can look for the scalp opportunity to the upside off of 293.35 and take it back up towards 298 for your resistance, or you look for the continuation below 293.35 and you play this down towards 281 half. That's basically my two scenarios for you. All right. But I would be a little bit more skeptic trying to force a situation at 293.35 until you get relatively that dead cat bounce and you can retest that resistance at 298. And ideally, look to probably go short at 298, risking the break over $300. That would probably be the ideal risk reward. All right. Other than that, CL oil is breaking out and Dixie pushing lower. I was actually just talking about the fact of XLE, so that kind of is, kind of the inverse of that. But the fact that oil is breaking out, let's take a peep. So a nice little reversal taking place on it, but I mean, crude is pretty much breaking down still. I mean, it's still relatively in the red. In resistance off of the crude here, I would be looking at 84 half. 84.53 is what I'm looking at for resistance off of crude. But I'm actually kind of glad that I swung the XLE puts. I'll likely take my profits at the open and just be glad with that and settle with it. Because the fact that SPY is already going to be opening down so much, I would anticipate we get a lot of chop, a lot of consolidation before we eventually get what seems like to be another leg to the downside. All right, so that's going to be more so my concern here. Kind of like how I heard Sig actually talking yesterday. Yesterday ended up feeling like a shit show, right? And I'm sure a lot of you were complaining about the fact that it was more relatively hard to make the gains that you had seen since we had this little bear market rally start. Just because that when you get stuck in those tight ranges, right, those little boxes that we had the relative to yesterday's price action, your premium ends up getting chewed up really quickly, especially those of you that go pretty far out of the money. Your premium will get destroyed within a blink of an eye because the longer price action goes sideways, the longer it takes to get to those strikes individually that you're pretty much buying, especially when it gets further out of the money that you're purchasing. All right, and of course that's basically the theta decay that's fighting against you. All right. Morning AA, what's going on? So that was pretty much setting up, but highlight this morning, give you guys a recap, kind of illustrating to what El Lobo just had me look at. Netflix had a nice little pennant action. Microsoft had a pennant action. Boeing had a nice little flag to the upside that was potentially looking like, right? And then we also had a bearish ascending broadening wedge on XLE. All of that makeup right there gave you that indecisive kind of moment yesterday, right? Towards the end of the close, in which case you ultimately wanted the market to go higher. You wanted to see a lot of those wedges break to the upside, but then you ended up seeing a nice little gap down here as we already attempted to break over 400, and now we're getting that dip as I gave you those key levels yesterday on SPY, looking at 394 for support, then looking down towards the major level of 390, and now we're likely going to be flirting with 387, and below that, of course, you have a beautiful gap fill sitting here waiting for you. Below this 370, what is this, 385.964, you have a beautiful gap waiting for you in which my last line of defense for the Bulls to hold this overall uptrend is at 376. The Bulls lose 376, it's gonna be out. That's it. You can pretty much look at the elevator down, and it's gonna be dead. All right. So that's pretty much what I would say with that. Otherwise, different names, of course, I could pretty much highlight some different levels. And actually, this is another one I could pretty much illustrate. You had a beautiful little flag setting up here on Tesla. On the hourly, it looks like a rising wedge. You probably pull it out to what, the 4 hour, the daily. It'll look more like a bear flag, and that's exactly what it potentially is. You saw basically that breakdown. You saw the meltdown into the lows, and we pretty much teetered closing right at my support at 186. And now next level of defense here is going to be 180.20. If we crack below 180.20, you look to confirm below a new bear market low here at 177.12, and you could put this on 167.90 here rather quickly, and that will be my next level of support that I'm watching. All right. But ultimately, what could end up happening here, as we already had a breakdown below my key level support, what do you typically do? You pretty much retest prior resistance, in which case we can end up retesting 186 at the opening bell here, and then we get that further continuation of the downside action, attempting to break below 180 and a new bear market low below that 177. All right. So that's another one that you can pretty much point to as well. Let's see what else catches my attention along the way. We looked at Netflix. I already peeped at Microsoft. We looked at Tesla. Let's see what other names. Actually, let's see where's Apple at. All right, so Apple actually is another one here. You could pretty much make the case here with this breakdown that we had, this little gap down. You could very well make the case that we had a nice little head and shoulders action that took place off of Apple. Of course, going into yesterday, you probably would have felt a little bit different about it. But ultimately, that gap down gave you a picture perfect head and shoulders action that ended up just gapping us down, right? So if I just highlight it now, you can pretty much see that more clearly. As we ended up gapping down, is what gave you the curl down for that right shoulder. You're going to tap right into support here at the opening bell at 145.31. Look to retest the neckline at 147.5. and then basically get your continuation of the downside. And next pivotal support is sitting down at 142.82, in which case below that 142.82, I don't believe there's much air holding us up between entering that gap fill below 140.40. All right. So bigger thing is too as well. As long as the fact that we've been seeing all these pennants, all these flags breaking down, Apple now with the head and shoulders. The bigger thing is to see exactly how much continuation we have to the downside, especially when you start to look at how massive these gaps are to the downside. In which, if you remember, a lot of those gaps that we're looking at that are so massive are dating back towards when we ended up having that massive gap up from CPI data. So that's exactly where we're going to look to see the retracements now to fill in those gaps off of what we had from that CPI data, which a lot of people think that the market did not warrant us going that high and such a massive gap up, in which now we're going to see how much do we basically come down into those gaps, or do we actually end up filling those gaps. And then that would also be the case in which it's going to be a fine line to where the bulls can pretty much retain this overall uptrend, or do the bears take control and we end up taking this down to a new bear market low eventually here before we end up seeing SPY back above 400. All right. So those are pretty much your indications, kind of just laying out, the landscape for you guys. Kind of just showing you exactly what you were looking at going into yesterday. Not even with extended hours on, more so, but giving you pretty much showing you the formations that were all setting up yesterday to give you those bigger images of those indecisive type of price action that would have led you or swayed you to pretty much end up holding calls or holding puts. All right. The only one that I would have likely said definitive, and that's why I did end up holding it, was the XLE, and that was because it already had a bearish setup, pretty much printing on it here, right? You already had a bearish ascending broadening wedge. On the other case, you had a lot of these pennants and flags that, like I said, if the video had done well, we would have saw semis pretty much show us some life. We could have ended up seeing a lot of those wedges and flags break to the upside, and that was the indecisive type of mindset that you would have been left having yesterday. Do I end up swinging calls on tech? Do I swing puts on tech? That's exactly what you would have been questioning yourself, as most of you actually probably did. All right. So hopefully that kind of gave you guys a little bit of a broader perspective, especially when you actually are looking to swing positions. You do need to look at more than one thing. You don't specifically just look at one particular no, ticker, unless you're looking at a sector, pretty much as I did with XLE, as I can tell it's a more broader bearish type of scenario for the entire XLE sector, not necessarily just looking at, say, a Chevron ticker, right? Right. I ended up looking at the broader sector to see exactly how that was pretty much painting. If we were going to see a leg higher, if maybe that was going to play vice versa to tech going higher or going lower, how was that going to pretty much impact XLE sector as a whole? But if you would have saw, like I just flipped through all those little different tech names, looking at Tesla, looking at Boeing and Microsoft, you would have saw all the different images that would have gave you that indecisive type of price action and would have made you second think whether to hold calls or puts overnight. All right. But I've been talking quite a bit. I think I covered most of what I wanted to cover. Obviously, we see the yields are pretty much up this morning. The 10-year, the 2-year are both up this morning. That is something that's obviously usually intriguing about the fact that usually when the markets are red, we typically see the yields up. Now, the only thing that's a little bit more obviously pretty much more of a head scratcher more so is the fact that the dollar is actually down. Typically when the market's red, we usually see the dollar elevated as well with the yields. So that is something that's a little bit intriguing to me this morning as well. But we are pretty much, for the moment being, it still looks like the dollar has found a little bit of a bottoming type of formation here, down at the daily 200-day EMA at 105.62. It's left to be seen if we end up breaking down below that 105.62, which in all would say that this overall little downtrend that we have thus far is potentially short term, and we should see a reversal back to the upside for equities. All right, but if we get continuation and we actually, this is a solidified base, and we end up, well, particularly breaking down, then that would pretty much be the case for the bull. If we end up finding a base here and we see the dollar pretty much rise, then that would give us the bear case scenario for the downside. All right. But yeah, I spoke a lot. Now I'm actually trying to mix words together. All right. So I will leave you guys with that. I will also leave up the SPY chart here for live. For for the next, what, 15 minutes roughly for our opening range to pretty much establish. And that way you can see the illustration off of my SPY chart to pretty much see how it plays out in real time with my support levels. As I've been illustrating, 394 was our prior support. They gapped us right below it. We're going to open up at my next level support at this 390 mark. And let's see if we get the bounce and how much of a bounce before we break down and we hit our next support level at 387. All right. So that's pretty much just black and white to end our little segment here for our morning live. But I will leave you guys with that. Any questions, just drop it in the chat. Feel free to give me any questions or comments in the chat, and I will be happy to respond for the next few minutes here. But I am pretty much wrapping it up. Hope you guys have a good trading day. Other than that, though, I'm out. Later, guys.